Hi, I'm Victor Cantore. I'm the president and CEO of Amex Exploration, and I'm live from London right now at the Mines and Money conference. So I'm glad to be back here in a conference that's live.
Fantastic. Victor, it's good to have you. Now, the irony is we're probably only a few miles apart, but I'm dashing to Africa tomorrow, so I'd love to have been there with you. Mines and Money Conference, one of the few live conferences to happen in recent times. What are you there to do? Who are you there to meet?
We have a lot of meetings with institutional investors. Like our last raise was primarily, I'd say probably as high as 98% was institutional investors that were involved in it. We're just doing, for us, it's just marketing, letting people know the story, where we're at, how drilling is going. It's just basically updating and letting them know that we're here and we're moving along. We're moving along nicely.
Fantastic. And like when we spoke in November, I said to you then, like the market's reacted very well to your story. I think you've kind of moved. It's been moving sideways in a market which has seen some violent declines of recent weeks. So your story's still holding strong. The raise has helped a lot, but I guess people are interested in what you're going to do with that money. Why raise so much money?
So the money, the interesting thing is that the way we did the raise, it's a charity. What we call in Quebec, it's a charity flow through. And we're able to do that at a substantial premium, meaning that there's less dilution to the shareholders. But the good thing about it is when you do a flow through, you know that money was being spent in the ground. It can't go for G&A or anything else you want to go. It has to go in the ground. So that's what the institutional investors really like, that they know we're spending the money in the ground. That's where you're going to get the value. And why so much money? Because it gives us at least 2 years of I have to spend that flow through. There's also a timeline. I have to spend it by December 2023. So that I'm good till 2023. There's no surprise. There's no, I'm not going to run out of money and I need to finance. And I think that's one of the reasons which helps your stock. There's the finance risk or a badly timed finance risk is it's pretty much diminished.
Yeah, and I think you were lucky in the timing. In the sense, I've been speaking to lots of companies like now over the last 4 weeks who were going to do a raise, who were going to put out economic studies, who were going to try and advance their project, who are now sitting back going, I'm not sure now's a good time to do anything. So timing, I guess, is your friend there. But let's remind people some of the grades that you were hitting when we spoke, and I've kind of got a few holes here as well. You continuing to hit these high grade numbers, right?
So the grades, I've some of my recent holes, like I had 102.07 grams per ton over 6.1 meters, 29 grams per ton over 8.4 meters. These are spectacular numbers. I've had in the shallower high grade zone, you're looking at numbers of 84 grams per ton over 5.6 meters. These are really spectacular holes. And on top of the fact that we've made other discoveries now in the vicinity, we have the E2 gold zone, the E3 gold zone. We had spoken briefly last time on the QF zone, which is the VMS zone. So it's really expanding out. We want to grow out the ounces as much as possible, going into a resource eventually.
Right, and I guess when I people send questions into us all the time, and I thank them for that, and they say they definitely deserve credit for being invested in trying to discover more. That's all good, but the nature and the tone of some of the questions suggest to me that people have made some money with the Great Bear acquisition of last year and the growth of that story. And you seem to be doing some of the same things. And I think people are looking to you and saying, well, okay, you put your data on the website. People can do their own resource models from that if they're interested. We're not rushing through these economic studies. We've just raised $50 million to put in the ground here. I mean, are you taking a leaf out of their book? Is that what you're trying to do in terms of taking the company forward? Because it seems to be slightly unconventional, as Great Bear was. But can you give us a little insight into how you're going to play this?
Yeah, absolutely. I mean, when you look at the discovery that Great Bear had made, their initial discovery, it was almost 2 years ahead of us, and so you've got 2 years of drilling ahead of us, and that's what we're doing. We've raised enough money that for the next 2 years, I'm just going to be drill. It's what we call drill. I mean, and bring out results, and you see the spectacular results we put out. Eventually, one of the majors, or my goal is to have that type of exit. So eventually, one of the majors is gonna see that there is lots of gold here, and they will do something. Yes, it's definitely going to be through an M&A transaction where we're going to be getting the most value immediately. We could take this project to production, but it's going to require a new team.
Yeah, no, I think we discussed that in November. But I'm just kind of trying to understand some of the timing or the kind of usual catalyst moments for companies where they put out a resource, the market gets a sense of what that's like. Because again, that's a Great Bear didn't bother with that process. They just kept drilling, right? So, and $50 million between now and the end of next year. Is it just more of the same? And if so, how do you avoid it becoming almost repetitive? I.e., people take it for granted and maybe stop looking, or that growth component stops. I mean, how do you play the market?
Sure. So the big zone that we feel where we're going to be able to build up a lot of the ounces. This is on top of the E2 gold zone, the E3 gold zone, and also the QF zone. But there's the Denise zone, which is the lower bulk zone, which is if you can compare it to the LP zone that Great Bear had, where you can get those wide intersections, lower grade. So we have been drilling there. There's going to be results that are going to be coming out here shortly, and that's really what's going to prove out that this structure can go on for kilometers with the same type of results that we've been getting in the past. So you'll be getting the same. You want to get the same type of high grade results that we've been getting, or the same type of good results, but expanding it in new zones. So you're building up. That's where you start to build up the resource. So that's where you want the same kind of results, but you're hitting it in new zones to build up. That's really where we're headed. Right.
Okay. And sorry, I promise this is the last kind of Great Bear analogy question, but there's a lot of questions in it, right? They did an NSR spin out for the benefit of their shareholders. Is that something that you'll take from their playbook?
It's something that's, yes, it's on the table. We just have to see. I don't know how much of it I can say without it being public, but I think I'll say what Great Bear did. What Great Bear did, I think that's something great, because you're doing it. You're giving value to the shareholders, and that's what we want to do. You're going to give value to the shareholders. The royalty is something else, right? So hand it out to the shareholders and give them more instant value for it.
Right.
It's something that I would definitely be positive. Whether it gets done or not, that's something else.
Right. True. Okay, so again, if let's come back to the raise that you did. Nearly $50 million is phenomenal. I get this flow through. Which was it? One or two institutions or multiple institutions? And what does that do for you? I guess it kind of steadies the ship somewhat in the sense that you're not going to have this sort of day trading in and out. But is it entirely what you wanted to do?
Absolutely. We really got very good participation from institutions basically around the globe. There was a lot of participation in Europe, a lot of participation in the US, and there were some of the older, some of the previous owners, but also new ones that came in. And that to me is very encouraging when you start having new investors coming in.
Right. Okay. And then with regards to the drill plan, what does that actually buy you in terms of meters? Just so I just get a sense of, compared to what you've already done, and how many more meters that will be, and if you keep pumping out the same sorts of grades, what that could mean.
So it's just doing the math there. It's $50 million. You divide that. Our all-in costs are around. They've gone up a little bit. Let's say if we want to be conservative and say it's as much as $200. As much as $200 a meter, you do that. I mean, that's a lot of meters over the next 2 years. So just this year, we plan on doing about 125,000 meters, and we'll probably do the same thing in 2023.
Right, and then so these your drills, or have you brought them in?
Oh, the drills are there. There's 10 drills. There's 10 drills on site right now.
Right, and you're managing that process.
Absolutely. We're managing the process. We're on target for a minimum of 100,000 meters. That's our goal, and we should be able to achieve it. Same thing like last year. We achieved it also. We did over 100,000 meters of drilling.
Okay, and with regards to obviously the meeting, today's day one, so I appreciate you haven't had that many meetings so far. But what are the concerns at the moment? I guess people are talking economy, Russia, Ukraine, inflation, the sort of stuff which has been on the lips of people for the past few weeks. Is there anything else that they're looking for advice from you on?
I mean, look, for sure the markets are very volatile. I mean, gold is still trading at a great price, and I understand the psyche of a retail investor, right? Gold falls off $30 or $40, and you get kind of scared, right? So, oh my God, it's down. But then again, it's still trading 1,800 plus, 1,900 plus. When we started this project, gold was trading around $1,300 an ounce. It's still very, very profitable. Like one of the things that we will do if we end up bringing out a resource, or if and when we put out a resource, we will have an economic study. And, these are very, very profitable ounces, what we're going to have here. So some of the concerns is the volatility in the market. But I think gold in the end will prevail. But at these levels, I'm fine. I mean, these levels were very profitable. The things that normally worry people is permitting, is jurisdiction. Where are you? Quebec checks all those boxes. You don't have to worry about this. There's the jurisdictional risk, permitting risk. As long as you follow the rules, it's great.
So with the institutions, in terms of the conversations that you're having, like I said, your timing, you couldn't have timed it better with the raise. But do you think you could have got that deal done today? And do some of those shareholders that came in February, are they at all concerned, or is it because they're long only that you can take some comfort from the fact that they won't be trading out of this thing?
Yeah, I think the timing was right in the sense where institutions, when they come in, they tend to have their timeline. So if they give you a timeline of 1 year, 2 years, 3 years, they tend to follow that, and they reassess when they get close to their timeline. Trying to raise that money today would have definitely been a lot harder, because I think there is still fear in the market. What's going to happen to the market? Even though we always feel our market will be fine, we're going to be okay, gold's going to do well, but it's still. I think the deployment of capital from January and now once this war was launched, I think it's a little bit different. I think we were fortunate that we were able to launch and successfully complete the deal.
Yeah, no, I get that. Are you getting any clues back from them as to how they feel that the gold market's going to react? Because like the traditional history says that in an economy like this, an environment like this, gold is safe harbor and it drives the share price up, but it hasn't been reacting to normal rules, as it were. And I get that you're happy at 1850. You certainly would be if you're a producer. But what are the funds saying to you? Do you think they're going to see more money inflows into gold?
I think they will be. They're not. We all do believe that, us in the gold sector right now, we all do believe that gold will eventually go. I mean, when you look at some of these down look as recent as if you go back March 2020, when there was that first major correction in the market. Gold had gone down with it, and gold started to go back up after that. And that's what I think is going to happen as the market will start to stabilize. I think gold will do very well. I think it'll go up in the whatever it'll do very well. I'm not worried about gold, and that's what we talk about. Everybody's like, we don't think gold's going back down to $1,200 an ounce, which this project would still be. Yes, it will affect the economics of it, but it's not fatal to this project. So I'm very comfortable that gold will do well over the coming months.
Yeah, it's kind of interesting, Victor. We've had a few fund managers on, and they've been talking about the sort of nervousness about the US property market, and obviously Bitcoin's full. It's full. The shine has come off a little bit from that, and the tech industry as well. It's had a real tough 5-6 months of it. It's the first time I've sort of seen the gold market sticking to the fundamentals of their own business and not pointing other people and blaming that for the lack of investment. So yeah, exciting times. Well, let's see what the rest of this year holds for us and for you. Stay in touch and let us know. Keep us up to date with these drilling results. I look forward to speaking to you again soon. And have a great rest of the conference.
Thank you. Have a great time. Bye.